Let's begin by looking at the big news of the day. Safaricom had its price estimates today raised by Morgan Stanley to 6 shillings and 40 cents, up from 4 shillings and 80 cents. They say the revenue environment is conducive to a positive surprise. How do you think the market is likely to react to this news?
Certainly coming from a big investment house like Morgan Stanley, which has an audience of international nature, we are likely to see a very positive reaction to this stock, reaching a wider spectrum of investors, especially when they raised the price expectation to an average of 6 shillings and 40 cents. Mark you, they actually felt that on the higher side it would touch 9 shillings. So we do expect a lot of interest in this stock. Yeah.
Now, the sugar sector, there's also some news coming out of the sector that has been, facing quite a challenging time with politics playing in. But the government now says it's ready to sell 51% stake, and there's a possibility of an IPO towards the end of 2010. What impact do you think this news will have on that particular sector?
First of all, today the Sugar Board released some information that the total sugar production in the country went up rather than down. That's a positive and a buoyant news that came into the market. We have seen a resumption of rains. And of course, the other sugar players like Mumias has been really doing great in the market. This, I see it playing positively into the market. Many investors are going to position themselves to perhaps get a stake into this. So this is a good development into the market, yeah.
And how about the fixed income markets? Towards the end of December, we saw investors take a flight to safety, taking on very keen interest in terms of what was going on, and the government taking quite a strong stand in developing the fixed income market. How is it as we get into 2010?
Terryanne, I must say that the fixed income segment has taken quite a good steps going forward. We have seen, for example, in December, the total trading for fixed income totaled 74 billion. And it surpassed most of our expectation. We expected to close at 210 billion, and I think we closed in the region of 250 billion in fixed income. We still have a very positive environment for fixed income trading. The interest rates are still declining. If you look at the government borrowing, the government pledged to borrow a total of 109 billion. They have already surpassed the 60 billion mark. They are left with somewhere in the region of 45 billion. 45 billion is not so much for the government to take. With the economy flush with cash in the market, all this cash struggling to find suitable investment vehicles, interest rates are still declining, and this augurs very well. Investors are likely to reap significant capital gains in the fixed income.